This is the Daily Market Rundown live from the Tradillo trading floor. It's June the 4th. Some highlights from today's show. The VIX is now approaching the Malos. The big beautiful bull faces some speed bumps, and bonds are steeper with more fiscal intervention. I'm going to sound like a bit of a stuck record here, but going into today's session, it's almost identical to yesterday's session. It's quiet out there, and of course, we know why that is the case. We do very much have the big macro events, the big macro hard data coming out, starting perhaps later on this afternoon, and then of course moving in towards the ECB tomorrow, and then of course Friday, the big non-farm payrolls print. However, I think this is the key sort of to take away, is that the jolts yesterday did not exactly jolt the market in a bad way. Now, like I've been saying, as we moved into the jolts, the key to yesterday's jolt and why it was so significant for markets was because this would have been the first bit of hard data that was fully impacted by the Liberation Day tariffs. Okay, and the point is that we had ultimately a very bad, uncertain tariff situation, and yet the US economy added jobs against the expectation. In other words, companies were not laying off people in an uncertain time. If anything, they were adding out or putting out more job postings to hire people. So I think the key takeaway from it is it kind of caught the market blindsided. It's kind of pointing towards what Chairman Powell's been telling us for some time now, which is they just don't see the weakness. They just see a very solid labor market. Now, of course, there's a number of other data points that do form the picture that the Fed sees, and we will, of course, get that in the form of the Fed, but we'll also get that in the form of some of the other data we're going to get later on today that we will talk about in a moment. But let's get across and talk about our first topic for today, and that's all about the doubling of US metal tariffs as of today. Now, the key takeaway from that is not that that's necessarily new news. I think the news to take away is that ultimately tariffs have doubled from 25% to 50%. It hugely impacts Canada and Mexico. They are primarily the two biggest that are going to be impacted by this. But what we do know, and this is the key takeaway, is that the UK ultimately has been given an exemption. Why? Well, because they have some sort of a preliminary trade deal. In other words, what this points to is that whilst Trump says to us that this is done to protect local industry, in actual fact, it's just another form of leverage. Okay, what he's leaning on is this idea of, look, hey, Canada, Mexico, send us your best deals, send us your best offers, and then we'll consider, of course, not having the 50% tariff, but ultimately just having the 25% tariff as originally imposed. And this is kind of the Trump playbook now. It's a sort of escalate to de-escalate, make it worse so that ultimately you can extract some form of better deal out of other countries. Now, with that in mind, we know, of course, that a letter has been sent to a number of key US trading partners saying, give us your best deal. And how this plays out quite gimmickly is that everyone kind of sends a letter of what they're willing to give up, what they're willing to do to appease the United States. And then effectively the United States trade team looks at it, they review it, and then they send a letter back saying, thank you, your tariff is X, and your tariff is Y, and your tariff is Z. And that's kind of how this plays out. Now the key takeaway, this is the key thing to know, is that we are going to be getting one of these deals perhaps later on this week, Friday, perhaps over the weekend, perhaps early next week. But the point is all these letters are supposed to be coming streaming into the US trading team effective as of today / tomorrow. Now, what happens is the first country, and we're going to see this is how it plays out. The US is going to use one country as a demonstration, okay, as a sort of an example. And what they're going to point out is, hey, look, country X has sent us their letter. Country X has agreed to buy more agri and agreed to, do this and do that. And we're very grateful for it. Thank you. Your tariff is Y. Okay, and they're going to use that as a sort of a tool to showcase to the rest of the world that if you can come to us with concessions, you can come to us and bow at our feet, we will give you a much lower tariff rate than everyone else, and of course lower than the Liberation Day. Okay, that's how this plays out. Now, what's important to take away from this as a trader is to watch very closely what that first deal looks like. Why? Because remember, we have the 10%. Okay, we have that baseline 10% that no one gets below. we also have that Liberation Day tariff sheet, okay, where everyone kind of got given a number, and that was their reciprocal tariff. Now, what we have to kind of gauge is where each country, or where that first country in particular, lands between the 10% and their reciprocal tariff. Okay, so for example, we know that Europe was going to be around 25%. So we know the baseline is 10%. We know the worst case is 25%. If Europe was the first country to get their letter responded to, which is very unlikely, but let's say, for example, they said, look, Europe, thank you for the deal, we're going to hit you with only 20% instead of 25%. The markets are going to react very, very badly to that. Okay, and that's what we now need to gauge, which is, what does that first deal look like? How far away is it from the Liberation Day worst case scenario, and how close is it to the best case scenario, which is 10%? Okay, because that's now how the market is going to respond moving forward. Okay, so that is, of course, then our takeaway from the doubling of the metal tariffs. Now, before we move on, of course, to our second topic, just a quick note. Tradillo has launched its new website, so you can go onto the website now, and you can, of course, go and register for the free trial. In just a few months, we will, of course, be launching the full application. That's going to include automated risk management, trade journaling, data analytics, premium trading education, as well as the trading community, and, of course, the trader funding program. So do make sure you go log on to www.tradillo.com to find out more. Register your email address, and of course we will notify you once the application is ready. Now let's move on and talk about our next topic, which is all about what's going on in the VIX. Now I think the VIX is signaling something very, very important. There is the daily chart of the VIX, and you can see that we're sitting very, very close to those May lows. Okay, now why does this matter? Because we know that 6,000 level in S&P is acting as a very, very stern resistance. There's perhaps a lot of reluctance to be buying it up above there, just given how much we've done, of course, over the last couple of weeks, but also because there are a number of risks, sort of in the near term. Think non-farm payrolls Friday. That is a risk for the market. And then, of course, we've got the July 4th Senate vote on the big, beautiful bill. That's another potential risk. And then, of course, we have also got the July 8th tariff Liberation Day deadline that's closing. So there's a number of risks sort of in the near term, in the next, call it 2 to 6 weeks. But the market's going to keep sort of moving beyond these risks as they don't eventualize. In other words, if the risk never is a risk, in other words, if the non-farms comes out solid, ultimately what's going to happen is we're going to just keep seeing that VIX inch a little bit lower. Okay, so it's a case of, if non-farms comes out solid, in line, or even just a small beat, what you're going to see is that May low is going to get taken on the VIX. Okay, we're probably going to test down towards 16 in the VIX. And then in a couple of weeks' time, if all of a sudden the big beautiful bill gets passed, and of course the Section 899 gets removed, that risk ultimately is gone. So then the VIX is going to go, well, hang on a sec, maybe we're actually trading in a 15.5 type VIX regime. And then if all of a sudden, the tariffs all come in and it's not as bad as expected, the baseline of 10% is upheld, well, then we're just going to keep inching our way lower and lower and lower. Okay, and that's kind of how this VIX is going to play out now. It's a case of there are less and less things that the market is concerning itself with. We know growth is now not one of those things that it's concerned with, because we do have a very solid set of economic data points coming out. So that's how you have to face this. Now what that means is ultimately is once we escape effectively that 17 level in the VIX, I do suspect 6,000 is going to get smashed pretty quickly in the S&P 500. And so that is the level to watch. Okay, above 6,000, it very much opens the door up towards that record high territory. In the near term, it will, of course, give investors confidence to continue deploying cash in the near term. Okay, so keep a close eye on the VIX. I think it is a very good proxy to watch out for. Now, just a little bit of interest. I'm sure you've all read about this, but there's a key takeaway from it. Of course, Musk has come out and said, naughty, naughty Trump, I don't like that you're spending, it's disgusting, blah, blah, blah. Of course, we know that Musk was tasked with Doge, which has been somewhat ineffective in terms of saving money. I think the key takeaway from this is not necessarily, about Musk going up against Trump. I think it's very much a case of there are some backers of Musk, that will stand by what he's saying, and that perhaps will push back on ultimately voting on the current big beautiful bill in its current state. Okay, so I suspect what this is going to lead towards is a little bit more pushback from some of the fiscal hawks within the Republicans. Keep in mind, of course, the Republicans have got sort of a slim majority in the Senate, so they will need to avoid at least 3 Republicans voting against it. We know all the Democrats will vote against it in its current form. And so it's very much a case of there are going to be quite a number of defectors that are going to not vote for this deal from the Republican side. Okay, and so I think that's the key thing here, is that I think what Musk is doing is good. I think it does mean there are going to be some changes to this bill, and now we need to listen very closely for what those changes are. Okay, I think one of the key things you want to listen out for, perhaps today, because we know Trump will be meeting with Senate Republicans, is about the business tax cuts. We know that if they are going to be made permanent, that's going to be hugely fiscal, sort of expansionary. So that will, of course, be positive for equities, but bonds may sell off as a result of that. So keep a close eye on that. And of course, that July 4th deadline is just around the corner. Okay, we're talking about a month away. So we are going to hear a lot about this bill in the Senate over the course of the next couple of weeks. So listen out for it, because there is going to be some headline risk. Okay. The other one, of course, to pay very close attention to is the provision section 899. Go read up about that. Make sure you're aware of that. We did, of course, talk about that in last week's daily market rundown. Okay. Let's now move on and talk a little bit about the bonds, because I think they are telling us something very interesting. Today, BOJ governor came out, or not the governor, but the BOJ has announced that they will look to begin tapering some of their QT next year. Now, interestingly, what have the bonds done? Well, they've steepened. Okay, we also had the German government come out and say, well, we are going to spend, call it, I think it was 50 billion odd, not a great amount, but ultimately we are going to, give 50 billion of incentive to corporations to ultimately, buy more equipment, and they can do a tax write-off, as well as, of course, invest in, sort of green battery technology for cars, etc. And the result was we can see some slight steepening in the bond curve as well. Okay, I think the point is that we know the bonds are very, very sensitive at the moment. Okay, we know that the bonds ultimately are doing nothing. Okay, they are really not moving now for the last 2-3 weeks, but we know they're very sensitive, and we know that at any moment, if we are going to get any kind of expansionary type commentary, whether it's the likes of Japan's BOJ or whether it's the German government, we can see that steepener play gets put on. Okay, in other words, investors are very much on high alert in terms of bond yields. They are very, very concerned about the direction of play, and yeah, we just have 2 perfect examples of it. Okay, two almost somewhat meaningless news flows, and yet we see steeper curves in both Germany and, of course, Japan. Okay, now what does that mean? Well, we do know that, of course, the US data is very, very strong. We do know this big, beautiful bill is being pushed, and the more likely it is to succeed in its current format, the more likely it is at some point that, of course, the US curve is going to steepen out very, very aggressively. Okay, so the point is, over the next 4 weeks, keep an eye on the US bonds, because at some point, if they are going to steepen, if we are going to get past that key 5-10 level in the 30-year, it is, of course, going to create a little bit of a risk-off scenario for the markets. Okay, now with that in mind, what does the chart look like? Like I said, we've not done anything. Okay, this is the monthly 10-year chart, and it's always good to look at these charts. We can see, for all intents and purposes, that we are in a flag, quite a bullish flag in terms of yields. So it does look like the path of least resistance is for a test of 5% in yields at some point over the course of the next couple of weeks. And of course, we can see that 2-10 curve there steepening, not necessarily aggressively, but it is steepening. Okay, and it's steepening every single time, as you can see on those vertical lines, every single time we get some sort of fiscal expansionary, some sort of inflationary type policy commentary. Okay, it's ultimately steepening as a result of what's going on at a macro level. Now, a key point to note is, of course, you can see that 462, we have not closed above that price point in, call it, almost over a year now. Okay, it's quite an interesting point. Should we close above 462? I do suspect that is going to create a little bit of concern for markets, just simply because of the absolute level of where yields are. Okay, but right now, like I said, we're pretty much flat on the year. We've not done anything in terms of yields. We are very much just in waiting mode. Okay, the market is waiting to understand now, is this big beautiful bill going to go through? If it is, well then yes, 5% is going to get tested pretty quickly. If it doesn't get voted through, if they make changes, well then perhaps maybe yields back off. If the US economy starts to re-accelerate, well then guess what? You are going to see those yields higher as well. Okay, keep an eye on those yields. Now, one other final note to pay attention to, I think Nvidia is a fantastic proxy for today, for tomorrow, for the next couple of days. Why? Well, we can see we're right back at that February retracement. Of course, that was post the DeepSeek situation. And we can see that has now acted as resistance a second time. This was, of course, last week, where we opened and sold off straight away from that 143 level. So I do think 143 is an interesting spot. And the reason we look to Nvidia is because Nvidia is the key driver again. Okay, Nvidia has been leading this entire rally up in the indices. It is leading the Mag 7 again. No surprises there. So keep a close eye on that, because I think we get up above that 143. Like I said, if VIX is below 17 and Nvidia is above 143, it really does point towards a high probability breakout above that 6,000 in the S&P. Okay, so it's very much the stars aligning, and I do suspect Nvidia is going to be a key proxy to pay attention to. Okay, and then finally, our data point for today, we of course do have the ADP, which will be watched, not necessarily closely, but watched. We do have the services PMI, which I think will be a little bit more closely watched. Of course, we know this is quite important in terms of US GDP and how it gets sort of derived. So keep a close eye on that. I think some things to watch out for. If you cast your minds back to the slowdown last year, the potential sort of economic recession that we didn't go into, but everyone was talking about. That's this point here where we saw quite a significant drop off, sort of February, March, April into July. And of course, that's when the Fed did cut 50 basis points. Now again, what you can see since pretty much Q4 last year is we're seeing something similar. Okay, perhaps not to the same magnitude where it's month over month drops. It's kind of more like a stepwise lower and lower. But the key takeaway, I think, is anything below 50 today is going to kind of raise a couple of eyebrows. Okay, now yes, Jolts were strong yesterday, but Jolts is only one data point. Okay, so keep an eye on the PMIs. Below 50, that's going to create concerns. The expectation is for a 52 print. If we were to get anywhere above 53s, okay, I think that just really is going to consolidate this idea that the US economy is anything but weak. Okay, what that does mean, of course, is perhaps a repeat of yesterday's session, which is more risk on, and ultimately equities at stage, perhaps a test and a breakout of the 6,000 in the S&P 500. Okay, with that in mind, then, of course, it is Wednesday. Like I said, the key data points are going to come perhaps tomorrow and Friday. So it is very much a case of, take your chances. The volumes are low. No one is really kind of engaging too much at these current points in the markets for obvious reasons. So do just take it carefully out there. Okay, make your money, get in, get out, and of course keep your powder dry until we get to the key events later on in the week. With that in mind, if there are any questions, do post them in the Discord channel. Otherwise, good luck out there, manage the risk, go make some money.